Hey guys, welcome back to the channel. It's another day on the stock market. I've been watching the S&P all day for one specific reason, and I'm gonna have the chart up here on WeBull just so you can see what we're looking at, because there's a barrier here that we don't want to break in the S&P. We don't want to close below 3,800. I have SPY up right now. This is the S&P 500 ETF made by Spider, and we're looking at this, and we don't want it to close today below 380 points. I'm going to try to get this video out to you before market closes, just so you can kind of have my thought processes. I'm staring at my portfolio on Robinhood as well, because if the market, if the SPY closes below 380 points, there's a good chance we'll see another 5 to 7% downside in the broader market next week. And it's because 3,800 for the SPY is kind of a psychological barrier, but it's also a support level right now. So it kind of keeps bouncing off of that. At one point today, it did drop below that, but it recovered very, very quickly. It only took a few minutes to get back above 380 points. So I think this is good. I think this is really good price action. I've been telling everybody on my Discord, look, it's not time to panic right now. In fact, I get excited when I see this type of price action, because I don't think we're headed for, I don't know, you guys are hearing such a wide range of things on YouTube right now, from this could be the Great Depression all over again, to this is the .com bubble, this could last a few years. I don't think that's the case. We've got stimulus in the works right now, okay? There's so much on the horizon right now that could pump more money into the markets. And I think that the markets are just taking a breather right now before going higher. Like we saw in September, like we saw in October last year. I don't think this is a crash like we saw in March. I don't think this is a crash like we saw during the .com bubble. I don't think we're there yet. I think it will happen. I don't think we're there yet. Now, I could be wrong. Please do your own research. Pay attention to the broader market, like the S&P, the NASDAQ, the Dow. All these kind of things are really important for you to pay attention to in the market if you're going to invest, period. Now, again, let's take a peek at SPY. I'm sure you guys are peeking at it. I have the daily 1 minute candle chart up right now, and it was looking pretty funky right here. I wasn't really liking where it was headed, and that got me kind of worried. And then this was followed by a big green candle, followed by some reds and greens, right? So there was some nice buy pressure here, buy volume here, and now again, as I'm talking, we're seeing some downward pressure right now. Again, that magic point we want to look for is 380, okay? If you're looking at the broader S&P 500, then you know you'll see 3,800 points instead of 380. Again, this is the ETF. Now, I want to go over a couple different stocks as well that I think are good bets right now, because the market has shit the bed. But I really think, let's just pull one up here. Tesla. 1 month chart. Tesla is down from a high of 883 down to 23%. Okay? If you go out 6 months, guys, this got to a high of what? 880, right? 883? Not that long ago. Just within the last month, 23% down from those highs. I heard Meet Kevin say it yesterday. The stock market is the only place where people get mad when prices are down. People get mad when they have to spend less on a stock. And that's a really good way to think about, I think, what's going on right now if you are investing in companies that are fundamentally strong. There are some more speculative plays that you probably don't want to be in right now. Now, a lot of people are still making a ton of money in this market day traders, some swing traders. I'm sure there are some great long-term investments as well. I want to pull up another company that I think is a great investment right now because it's down a little bit. Apple. If you look at the last month, again, down from 145. I got to a low of being down 15%. Still down almost 14% right now. It's up a couple percentage points today. Another great company with great fundamentals. This is a company that's still over a $2 trillion market cap. Like Tesla, for instance, right? If you're buying Tesla right now, do you believe that Tesla is going to be worth more than $680 over the course of the next 5 years? That's what you have to ask yourself. Do you think they're going to be worth more than $680 over the next couple years? Do you think by the end of the year they'll recover? You've got to ask yourself these questions. Amazon, if you go over the last month here, we're down almost 9% in Amazon over the past month from their highs. If you look at Facebook isn't down as drastically, but they got down to down 10% just yesterday. Now they've recovered a little bit from those lows. Teladoc hit highs just the other day, down 24% from those highs. Again, ask yourself, do you believe in these companies long term? Do you think they're going to recover? That's what you got to ask yourself. CRISPR, really great genomic stock that's changing the world with their Cas9 technology. Guys, this one's down 25% right now. Another great company. So these are some really good companies to look at. Again, Tesla, Apple, Amazon, Facebook, Teladoc, CRISPR. There's a lot of them out there, though. There's a ton of companies out there to look at that are on sale right now because of what's going on. Now, could the broader market fall further? Yes, absolutely. Could Tesla fall further? Apple, Amazon, Facebook, Teladoc, CRISPR, could all these companies fall further? Sure, they could. But you've got to ask yourself, are you willing to hold on to these shares long term? Another strategy we've been talking about over on the Discord is there's a lot of Spacs out there that have been hit pretty hard. Spacs before merger, they have a floor of $10 per share. Worst case scenario, you're able to redeem your shares for $10 per share. That could be a good strategy right now too. I made a video the other day talking about different SPACs that could be really good options right now that are beat down a lot because of what's going on in the market. Some of them still under $11 per share, some of them over 12, over 13, but those have calculated downsides, right? Let's say you invest in a SPAC at $13 per share and it has a calculated downside of $10, right? It could go down to $10. So you can calculate your risk a little bit more than you can with some of these other companies that could get hit a lot harder. So for instance, I'm staring at the S&P 500 right now over and over again, and as I'm talking, it's jumped up over to 38.3 now, which is nice. I'm looking at this the S&P because if it drops below 3,800, I'm holding Nano Dimension, for instance. Okay, now Nano Dimension is under $10 per share right now. However, it's still up a few 100% over the past few months. So you've got to consider, right? You've got to consider that kind of thing with some of these stocks. Could they fall further? A lot of these stocks that are up like crazy could have tremendous downside because people tend to sell the companies that they have the most profit in first and transition to some of the safer bets when there is some sort of correction. So for the case of Nano Dimension, for instance, that would be one I'd be looking to sell if S&P fell below 3,800 because I think there would be potentially 25 to 30% more downside at least in a company like Nano Dimension, or even more because it is up so much over the past couple months. So I just want to give you guys kind of my thought process with it all. And I don't know, somebody commented today, oh, this guy's so relaxed because he sold Nano Dimension over and over and over again. I actually document my trades over on my Discord. If you're interested in that sort of thing, you can join the Patreon on March 1st. Don't join now because you'll get billed again. But if you join on March 1st, the Discord, I'm kind of likening it to your favorite support animal right now. It's like we're not over there making thousands of dollars right now, because I don't know of really many people at all making a ton of money in this market. But we're keeping each other grounded in a way that is objective and logical, and trying to keep everybody from panicking. And if you want that sort of support, consider joining the Patreon. I would love to have you over there. But again, join on March 1st, because I don't want you to get billed twice. And there's not going to be a ton of stuff going on over the weekend, so Monday might be a good time to join. So, guys, I'm happy where the S&P is going right now. Again, I'm going to try to get this out to you. I'm recording this just before 2 o'clock. I'm going to try to get this out to you before 3 o'clock when markets close, because I want you to kind of have my thought process and what I'm doing right now. I don't think the market is crashing. I don't think the world is crumbling around us. I don't think this is the beginning of the Great Depression. I don't think that the markets are burning. I just don't. But we could be on the precipice of a wider correction, and I think you have to be prepared for that, because it's inevitable. It may not happen right now, but a market correction is inevitable. Markets are cyclical. They go up, they go down. They have to. We can't all be billionaires, right? That just wouldn't work. Guys, thank you so much for joining me for another video. If you found any value in this video at all, just hit that like button for me. I'll see you in the next video. Thanks.